Investing your money is one of the smartest things you can do to secure your financial future. But with so many different investment options available, it can be overwhelming to figure out where to start. In this video, I'll walk you through some of the most common ways to invest your money. First, let's start with the basics. When you invest your money, you're essentially putting it to work for you in the hopes of earning a return. The return you earn on your investment can come in a variety of forms, including capital appreciation, an increase in the value of your investment, or dividends, a payout from the company or fund you've invested in. Now let's talk about some of the different ways to invest your money. Stocks. Stocks are one of the most popular investment options, and for good reason. When you buy a stock, you're essentially buying a small piece of ownership in a company. If the company does well, the value of your stock can increase, allowing you to earn a return. However, if the company performs poorly, the value of your stock can decrease, which could result in a loss. Bonds. Bonds are essentially loans that you make to a company or government. When you buy a bond, you're lending your money to the entity issuing the bond, and they agree to pay you interest over a set period of time. At the end of that time period, you'll receive your principal investment back. Bonds are generally considered to be less risky than stocks, but they also offer lower returns. Mutual funds. Mutual funds are investment vehicles that pool money from a group of investors and use that money to buy a diversified portfolio of stocks, bonds, and other assets. Because mutual funds invest in a variety of different assets, they offer a level of diversification that can help to reduce risk. However, mutual funds also charge fees, which can eat into your returns. Real estate. Real estate investing involves buying and managing property, with the goal of earning a return through rental income, appreciation, or both. Real estate investing can be a bit more hands-on than other types of investing, but it can also offer the potential for higher returns. Exchange-traded funds, ETFs. ETFs are similar to mutual funds in that they pool money from a group of investors and invest that money in a diversified portfolio of assets. However, ETFs are traded like stocks on a stock exchange, which makes them more liquid than mutual funds. Good luck with your investments.